And the whole premise of John Bogle and the Vanguard 500 was human decision making is inadequate compared to the market, and will generally be, the market is smarter than any individual's opinion anyway. So passive investing outperforms active investing most of the time, and Vanguard has lots of large passive funds. And once you understand that, you realize the core premise of a Bitcoin treasury company is we're driving Bitcoin adoption by capturing equity investors who can never by mandate buy a commodity. I mean, in our last presentation, we showed $35 trillion of discretionary capital for equity investors versus $700 billion of discretionary capital to invest in commodities, right? So that's 50x as much. So 50x as much capital can flow that way. Then Bitcoin treasury companies are creating an on-ramp for credit investors, right? Because there's $65 trillion of that we showed. So there's even more credit, not quite 100x as much, but 95 times as much capital to buy credit instruments as opposed to commodities. And then this Vanguard example, which is also the S&P example, is there's a set of investors that just park their capital in index funds. They don't make a decision. It's all passive capital. Passive capital locked up in the S&P or the NASDAQ 100 or the MSCI index or total stock market indexes, they can never buy the commodity. They can never buy Bitcoin. They can never buy silver, gold, or palladium. Doesn't matter how good it is. You could record 18 million hours of Bitcoin podcast. You could give away the Bitcoin for free. They're still never going to buy it, right? Because they can't. Because the capital markets in the world are structured. So we're benefiting from passive flows. We're benefiting from active equity investors. We're benefiting from active credit investors. And we're benefiting from, this, I can't even name all the different types of capital that are locked up.